How has the history of financial planning shaped the planning profession today? Began as a small group of salesmen giving financial advice. When would a financial planning firm be filed under FINRA? When they are selling a product. What is the CFP board's definition for fee only, hourly, retainer, or fees only, no commission-based products sold? For what might a CFP be sanctioned? What is a balance sheet? Listing of assets and liabilities total to the net worth. What might a financial planner use a balance sheet for? To determine the client's net worth. What is an example of a type of asset account on the balance sheet? Cash and cash equivalents, investment assets and personal use assets. What are the different types of liability categories reported on the balance sheet? Current and long-term. How are the assets and liabilities reported on the balance sheet? Assets and liabilities reported at fair market value. What on the balance sheet would cause net worth to increase or decrease? Increase in assets would cause increase in net worth. Increase in liabilities would cause decrease in net worth. What is the difference between fair market value and cost basis? Fair market value is what an asset is worth now and the cost basis is what you actually pay for something. Is fair market value or cost basis reported on the balance sheet? Fair market value. Assets liabilities equals net worth. What is the income and expense statement and what is it used for? Listing of income, savings, and expenses that represents income and expenses over a period of time. What is discretionary cash flow? Cash that can be avoided in an emergency. What is a budget and how is it generally prepared? 1. Establish goals. 2. Determine client's income for a time period. 3. Determine expenses. 4. Determine whether the net discretionary cash flow is positive or negative. 5. Present expenses as a percentage of income for the time period being presented. Is a budget focused on the past or the future? Based on client's past earnings and expected income for the time period that is being budgeted. Equation for emergency fund ratio. Cash and cash equivalents / monthly non-discretionary expenses. Front-end equation. Housing costs / growth pay less than equals 28%. Back-end equation. Pay / gross income less than equals 36%. Savings ratio equation. Annual savings / annual gross income equals target of 10 to 13%. What is a credit / FICO score? A number assigned to you based on your credit report. What factors determine the credit / FICO score? What is in your credit file such as your payment of student loans and credit accounts? What is the difference between a credit freeze and a fraud alert? Credit freeze is when all of your credit cannot be used and fraud alert is a warning message sent to you. What is the difference between Chapter 13 and Chapter 7 bankruptcy? 7 is straight bankruptcy which eliminates debt and lets a new credit file begin in 10 years. 13 is a wage earner plan where you make small payments and is on file for 7 years. What are the advantages of renting versus buying? Renting allows for flexibility, does not include petty costs, and you are not responsible for maintenance and operating. How much must generally be paid as a down payment to avoid private mortgage insurance? 20%. How much equity needs to be in the home to avoid PMI? 20%. What must not exceed 80% LTV? What are the advantages and disadvantages of a 15-year mortgage? Less total interest paid, faster payoff, lower interest rate. What is an adjustable rate mortgage? Interest rate and payments fluctuate within limits of a specialized interval. How long is a fixed rate for an ARM and when does it actually change? May be fixed for 3, 5, or 7 years and then becomes variable when the time is up. During variable rate periods, how are ARM rates generally determined? Add the margin to the associated index. When is it reasonable for a homeowner to use an ARM versus a fixed rate mortgage? When they have a high risk tolerance and the ownership period is short, they also have a lower interest rate. When would someone want to lease a car versus buy? If they are financially stable and want a new car every 2 to 3 years. Also if they take care of their cars and drive less than 15,000 miles annually. What is the federal tax formula from beginning to end? Income deductions equals taxable income tax rate equals tax liability. How do you calculate tax payment due for a household with the income tax tables? Find the table associated with their income and then match it up with their filing status. What is a common exclusion for gross income? 1. Interest income from municipal bonds. 2. Child support payments. 3. Cash or property from inheritance. 4. Gifts. 5. Scholarships. 6. Life insurance proceeds. What is a common adjustment for AGI? Expenses of carrying on a trade or business including most rental activities, health savings account deductions, certain moving expenses, college tuition, alimony paid, jury duty pay. What are common itemized deductions and limitations? 1. Investment interest expense. 2. Charitable contributions. 3. State and local income taxes. 4. Medical and dental expenses in excess of 10% AGI. What is the difference between a marginal tax rate and an effective tax rate? Marginal tax rate is tax rate on the top dollar. The effective tax rate is the combined tax rate used to evaluate total tax bite and relative tax obligations amongst clients. When do you use the marginal tax rate? Used to evaluate strategies affecting individuals' top dollar. When do you use the effective tax rate? Used to evaluate tax bite and relative tax obligations. What are capital gains taxes and how are they applied? Capital gains taxes are taxes that you pay as a result of a sale of capital asset where the sale price exceeds the purchase price. What is the maximum deductible capital loss per year? $3,000. How are losses carried over to future years on the 1040? The excess of $3,000 is carried over. If you have a capital gain on page 1 of the 1040, how does it affect the taxable income number and taxes owed? You owe less if you have capital gains taxes on a long-term gain because the tax rate is lower. How does the marginal tax rate affect the capital gains rate? Short-term is always the marginal tax rate, long-term is always the cap gain rate. How long do you hold long-term capital gains? More than 1 year. How long do you hold short-term capital gains? Equal to or less than 1 year. 401k is what type of account? Tax deferred. What type of account is a Roth IRA? Tax-free. What are the tax implications of investment income in a tax-deferred retirement account versus a personal brokerage account? Any investment activity in tax-deferred and tax-free accounts does not flow through to the tax return. Investment activity in the taxable account has to be reported on the 1040. When do you get taxed in a tax-free account? When you put money in. When do you get taxed in a tax-deferred account? When you take money out. What is the basic definition of AMT? A tax calculation that adds certain tax preference items back into adjusted gross income. What is the purpose of AMT and how does it generally work? AMT is designed to prevent taxpayers from escaping their fair share of tax liability through certain tax breaks. What is the difference between non-refundable and refundable credits? Why might a taxpayer be subject to penalties or interest or both? Failure to pay and failure to file penalties. What is payroll tax? Social Security and Medicare tax. What is the percent for Social Security? 6.2%. What is the percent for Medicare? 1.45%. How do you calculate FICA tax owed below the $118,500 limit? Add the Social Security and Medicare percents together and take that percent of the amount. If a client buys dinner on his credit card for $500, what happens to his net worth? current liabilities increase and net worth decreases. What are the candidate fitness standards? Things in your past that prevent you from becoming a certified financial planner. What are the principles of the Code of Ethics? Integrity, objectivity, competence, fairness, confidentiality, professionalism, diligence. What are the practice standards? Examines how you are following the financial planning process. The practice standards seek to establish the level of professional practice expected of certificates engaged in financial planning. What 4 areas are considered to determine whether practicing is financial planning? 1. Clients understand. 2. The degree to which the steps are followed. 3. The comprehensiveness of data gathering. 4. The depth of recommendation. If you're not managing any money but you are giving advice, will you be managed by the SEC or the state? State. When does the SEC manage an advisor? When they work with over 100 million. When does FINRA get involved? When you are selling products. What do rules of conduct do? Establish expected high standards and also describe the level of professionalism required. What are the ways the CFP board can discipline an advisor? 1. Private censure unpublished, slap on the wrist. 2. Public letter of admonition published. Letter 3. Suspension suspended up to 5 years. 4. Revocation permanent loss of CFP title. What are the monitoring responsibilities and why are they important? Monitoring responsibilities are the client and advisor's decision on who is responsible for monitoring accounts. It is important that they are realistic and clear so that things don't go undone. When can you be a member of NAFA? If you offer a fee-only service. What are fee-based services? A combination of fee-only and suitability services. What is the life cycle approach? A brief overview of client's financial profile consisting of understanding expense categories, asking about jobs, and asking about what client feels about something. How much FICA does the employee owe on $100,000? $7,650. How much FICA does a self-employed person owe on $100,000? 100,000.9235 equals $92,350. $92,350.153 equals $14,129.55. C. Interest rates are expected to increase and the risk tolerance of the individual is low. TF. A 15-year mortgage requires higher monthly payments than a 30-year mortgage and results in less interest paid over the life of the loan. True. TF. I have to pay money to receive my credit report. False. TF. Payment history affects my credit score. True. TF. Ordinary marginal tax rates are higher than capital gain tax rates. True. How much will I save on an IRA contribution of $1,000 if my current year marginal tax rate is 28%? $280. If I expect my marginal tax bracket to increase from 28% in 2014 to 33% in 2015, what is the additional marginal cost to me if I take a $1,000 IRA withdrawal in 2015? $50. What is the difference between a marginal tax rate and an effective tax rate? Marginal rate is the rate assessed on your top dollar of income. The effective tax rate reflects the total tax paid compared to total income reported on your tax return. Which tax rate would I use in evaluating the difference between income tax strategies for one person? Marginal tax rate. What is my long-term capital gain tax percentage if I am in the 10% or 15% marginal tax bracket? 0%. What is the total FICA tax owed for a self-employed business owner with $100,000 of net Schedule C income and who pays it? Equals $92,350 of income is subject to FICA tax. $14,129.55 is the total FICA tax owed and the self-employed business owner pays it all. What do current assets and current liabilities have in common? Both are converted to cash or paid off within 1 year. Calculate this couple's emergency fund ratio based upon the following information. Liquid assets equals $3,976. Investment assets equals $10,738. Annual non-discretionary expenses equals $13,913. Current liabilities equals $9,247. And does it fall within the recommended target? $3,976 equals 3.43, and yes, it falls within the 3 to 6 month range. Calculate this couple's net worth based upon the following information. Checking equals $2,000. House equals $125,000. Savings account equals $3,000. CDs equals $5,000. Automobile equals $13,500. Stocks equals $10,000. Mortgage equals $80,000. Auto loan equals $5,000. Credit card bills equals $1,500. $71,500. The Coopers have a net worth of $250,000 before any of the following transactions: paid off credit cards of $9,000 using a savings account, transferred $5,000 from checking to their IRAs, purchased $2,500 of furniture with credit. What is the Coopers' net worth after these transactions? $250,000. There is no change.